In this video, I will be speaking about BTC USD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market, then we will move to the on-chain data, and by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that at the moment we have a market which has created this W formation, and after the creation of a W, what you expect is first the completion of the pattern at the neckline, and then a potential rejection to the upside. So here on the monthly, we could expect some a little bit more bearish price action before then getting a rejection to the upside. We can also notice, if we look closely, how this is exactly the zone of previous monthly resistance, which is now turned support, which at this point we could expect the market to go and test and then to reject to the upside. Going down on the weekly time frame, what do we see? Now, from a weekly perspective, we can see how this is where we have the previous weekly supply and resistance from which all this move to the downside was created, which is now turned here support and demand. So what we could expect is a potential stop hunt of all the stop losses that are below this low, that essentially are of traders that started FOMOing into this market during this move to the upside with leveraged longs and had their stop losses below this low, so the market could easily go and hunt all those stop losses before then creating the potential rejection to the upside. Now, if we go down on the daily, what do we see? Now, from a daily perspective, the structure is very simple. At the moment, we have a new high, which is essentially this one here. Until the market will remain below this high, we will remain in a bearish market from a daily perspective, which is a market which essentially is creating lower lows and lower highs. However, if the market will manage to break above this high, which we don't know when the market will do it, but if we actually get a break, at that point we would have a shift from a daily bearish market to a daily bullish market. And if that will happen, at that point we would have the monthly, weekly, and also the daily time frame all aligned for more bullish price action to be created. So at that point, after the break, on the retest of previous resistance turn support, this is where we would have very good probabilities to have a potential rejection to the upside. Now, if we go and see what we have when it comes to the on-chain data, so essentially how Bitcoins are moving on and off from exchanges, if we look at the exchange reserves, what we can see here is that the black line is the price, the purple line is the amount of Bitcoins on exchanges. As price was dropping, the purple line, so the amount of Bitcoins on exchanges, was dropping even harder, showing how we have a massive illiquidity in the market, so that if demand will increase, or if the amount of Bitcoins emitted into circulation gets cut in half, which is exactly what will happen with the next halving event, at that point price should increase to accommodate for that new demand. So if we actually get this break on the retest, how we could be approaching this potential rejection to the upside. Now, as usual, trading is reactive and not predictive. The monthly, weekly, and daily, combined with the on-chain data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside for the market to complete this impulse correction and impulse pattern to the upside. Now, if you enjoyed this free analysis, education, and update, make sure that you drop a like and a comment. It really does support the creation of more free analysis, education, and updates for all of you, and I will see you in my next breakdown.